Tom Lee just dropped a powerful message for investors, and it's one that could change how you see the markets right now. According to the co-founder of Fundstrat Global Advisors, we are officially in a new bull market, and he's got 5 strong data-backed reasons to prove it. Not only that, but he also breaks down 5 big opportunity areas where smart money might be headed next. If you've been watching the markets lately and wondering whether this rally is real or just another head fake, this video is for you. In this video I'm going to show you the key clip of Tom Lee breaking it all down, and then I'll give you my own take and reaction to what he said, what I agree with, what I'm cautious about, and what I think it means for everyday investors like you and me. I'm going to unpack the signals he's looking at and explain what it all means in plain English. And that's not all. Right after that, I'll share with you 2 high-conviction growth stocks that I believe are perfectly positioned for long-term success in this new bull cycle. So if you only have time to watch one video today, this is the one. Stick with me till the very end. I promise you'll walk away more informed and possibly even ready to take action. Don't forget to hit that like button. Let's aim for 1,000 likes on this one, and drop your thoughts in the comments below. And if you haven't already, subscribe to the channel so you never miss a crucial investing update. Alright, let's roll the clip and hear what Tom Lee has to say.
Our view still remains in place. I think a new bull market really did start in early April. The ISM is still below 50. I think that's consistent with the early cycle. We still have a huge housing deficit. And until we start building more homes, I think that's a leg to growth next year. FINRA margin debt has shown 3 consecutive months of declines. That's not consistent with the top. We know sentiment's still, on average, pretty bearish, and it's one of the most hated rallies. And to understand that, consider that there's still a lot of stock buybacks taking place. This is from Goldman Sachs. And yet, if you look at positioning of systematic macro, according to Goldman, they're only flat right now. Now, they're flat while the market's rallied 20%. That's pretty surprising. And if you look at when they go above 0, of course, those are boom times for stocks. And so that's what you have to ask yourself. Are they about to become more bullish? And look at the prime brokerage data on net buying. There have been 4 months of selling and then only 1 month of buying. And look at this data from JP Morgan. Short interest in the SPY has been rising.
This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Alright, so let's start with the main thesis from Tom Lee. He believes the new bull market began back in early April. Now, that may sound surprising to some people because the mood out there is still cautious, even downright bearish in many circles. But that's exactly the point. According to Tom, the disbelief is part of what makes this rally so strong, and so hated. He calls it one of the most hated rallies in recent history. And that's not just hyperbole. He's pointing to actual market behavior to support that claim. Let's break it down. First up, the ISM Manufacturing Index. Tom mentions that the ISM is still below 50. Now, if you're unfamiliar with that number, the ISM index measures the health of the manufacturing sector. A reading below 50 signals contraction, and above 50 means expansion. So, the fact that it's still below 50, in his view, is a sign we're in the early stage of the cycle, not the end. And in market cycles, the early stage is where bull markets typically begin. It's when the economy is still healing, sentiment is low, but opportunities are starting to build quietly under the surface. Then he talks about housing, and this part is huge. According to Tom, there's a massive housing deficit, and until we start building more homes, that demand will keep acting as a tailwind for economic growth in the coming year. Think about it. Housing is a foundational part of the economy. It touches construction, labor, finance, materials, and more. If there's a shortage, the pressure to catch up means more jobs, more activity, and more corporate profits down the line. Next, margin debt. He points out that margin debt has declined for 3 consecutive months. That's important because margin debt, money investors borrow to buy stocks, tends to rise at market tops when people get greedy. The fact that it's dropping while markets are rising, that's not what you'd expect at a peak. It suggests investors are still playing it cautious, which ironically is more bullish than it seems. Now let's get into sentiment and positioning. Tom says sentiment is still pretty bearish on average, and he's right. Despite the market rallying around 20%, many investors still haven't bought in, and the data backs this up. He references Goldman Sachs research showing strong corporate buybacks happening, that is, companies buying back their own stock, which typically supports share prices. yet systematic macro funds are still just flat. Let me explain that. Systematic macro funds are large-scale, data-driven institutional players. When they're flat, it means they're not aggressively buying or selling. They're neutral. Now consider this. They've been neutral while the market gained 20%. Imagine what happens if they start turning bullish. That could act like jet fuel for the next leg higher. He also mentions prime brokerage data. According to Tom, we've just seen 4 straight months of net selling, followed by only 1 month of net buying. Again, that tells you investors haven't chased this rally. They're skeptical. They've stayed on the sidelines. And finally, he brings up short interest in the S&P 500 ETF, the SPY. JP Morgan data shows that short interest has been rising, meaning more people are betting against the market. That's another counter signal. When too many traders are short, betting on a drop, but the market keeps climbing, that's a sign of strength. And if those short sellers have to cover their positions, basically buy back the stocks they bet against, it can create powerful upward momentum. So what does all this mean? In short, this rally has legs. According to Tom Lee, it's not built on hype or euphoria. It's built on disbelief, underinvestment, and strong underlying drivers like housing and innovation. And if we're truly in the early stages of a new bull cycle, then this might just be the beginning. This also means opportunities are out there for long-term investors, especially in sectors tied to growth, innovation, and the broader economic recovery. So, to recap, Tom Lee is bullish, but not recklessly. His argument is grounded in data and sentiment trends, not just vibes. And if he's right, if we're in the early innings of a new bull market, then staying on the sidelines might be riskier than stepping in with a smart strategy. Let me know in the comments. Do you agree with Tom's take? Are we in a new bull market, or is this just a bear market bounce? I want to hear your thoughts. And in the next segment, I'll share 2 growth stocks I believe are positioned to benefit most if this bull market continues. So stick around, you won't want to miss that. If you found value in this breakdown, hit that like button. Let's get this video to 1,000 likes. Share it with someone who needs to hear a fresh perspective on the market. And of course, subscribe to the channel for more breakdowns, market insights, and smart investing ideas every single day. Now let's break down the 2 high-conviction growth stocks that I believe are perfectly positioned for long-term success in this new bull cycle. First up, we have a titan of the tech world, a company synonymous with innovation and cutting-edge technology, Nvidia, ticker NVDA. This isn't just another tech company, it's a driving force behind some of the most transformative trends shaping our world today. Nvidia stands tall as the undisputed leader in graphics processing and, more importantly, AI innovation. They've consistently pushed the boundaries of what's possible, pioneering advancements that have revolutionized industries and redefined the technological landscape. While Nvidia initially built its formidable reputation on gaming, delivering stunning visuals and immersive experiences to gamers worldwide, its true game-changing breakthrough lies in the realm of artificial intelligence. This is where Nvidia has truly cemented its legacy. The very same powerful GPUs that once solely powered breathtaking video games are now the essential backbone of artificial intelligence and machine learning, driving progress across countless sectors. They are the engines that power the AI revolution. In a world gripped by the AI gold rush, Nvidia's chips are the indispensable picks and shovels, the fundamental tools that everyone needs to participate and thrive. They are the infrastructure upon which the AI revolution is being built. Every major tech company, from the established giants to the countless innovative startups, needs Nvidia's cutting-edge hardware and, crucially, their proprietary CUDA software platform to unlock the full potential of AI. And the demand for these essential tools is simply insatiable, constantly outpacing supply. Nvidia's data center revenue, fueled by this relentless demand, is growing at astonishing triple-digit rates, a truly rare and remarkable feat for a company that has already achieved such immense size and scale. This kind of growth is almost unheard of. Much of this success can be attributed to the visionary leadership of CEO Jensen Huang, whose strategic foresight has truly set Nvidia apart from the competition. Years ago, with incredible foresight, they made significant investments in both groundbreaking hardware and a sticky software ecosystem, creating a powerful combination. This strategic move has resulted in the creation of a formidable moat, a significant competitive advantage that competitors are finding incredibly difficult to cross. Developers around the world are trained on CUDA, Nvidia's software platform, and countless applications are specifically optimized to run flawlessly on it. The more developers who join the CUDA ecosystem, the stronger Nvidia's network effect becomes, creating a virtuous cycle of growth and innovation. And the total addressable market for Nvidia's technologies is absolutely massive. AI, the driving force behind countless innovations, and autonomous vehicles poised to revolutionize transportation, drug discovery, accelerating the development of life-saving treatments and robotics, transforming industries with automation and even the metaverse, with its promise of immersive virtual experiences, all rely heavily on high-performance computing, an area where Nvidia reigns supreme. While some investors may worry that the stock has already run too far, appreciating significantly in a short period, the reality is that the AI revolution is still in its very early stages, with immense potential yet to be unlocked. And Nvidia is strategically positioned right at the very center of this profound technological transformation, poised to benefit enormously from its continued growth. Their unwavering commitment to relentless innovation ensures that they remain at the forefront of the industry, constantly pushing the boundaries of what's possible. Each new generation of Nvidia chips brings significant leaps in performance, delivering exponential improvements that unlock new possibilities for AI and other demanding applications, and their strategic expansion into software and services is adding a valuable layer of recurring revenue, further strengthening their financial foundation. Financially, Nvidia is a true cash machine, generating substantial profits with strong margins and boasting a fortress-like balance sheet, providing them with incredible financial flexibility. This financial strength allows them to heavily reinvest in research and development, fueling future innovation, while also providing attractive returns to shareholders through dividends and stock buybacks. Furthermore, geopolitical factors are also boosting demand, as countries around the world engage in a fierce race to build out their own AI infrastructure, recognizing its strategic importance. Of course, risks always exist, including potential regulatory hurdles, increased competition, or a slowdown in overall AI spending, which could impact Nvidia's growth trajectory. However, Nvidia's current market dominance and the sheer scale of the long-term opportunity in AI make the long-term investment case incredibly compelling. While the valuation may appear high at first glance, the company's rapid earnings growth is more than justifying it, making it an attractive investment even at these levels. This is a foundational, long-term holding that should be a core component of any serious growth investor's portfolio. Nvidia's reach extends far beyond data centers, with its Drive platform powering the next generation of self-driving cars, and into professional visualization, providing designers and artists with the tools they need to create stunning 3D graphics and visual effects. But the real secret sauce behind Nvidia's success is undoubtedly the CUDA platform, with over 4 million developers actively using it to build and deploy AI applications, effectively locking in Nvidia's hardware as the de facto standard for AI development across the industry. When you combine Nvidia's undisputed dominance in both AI and gaming, their visionary leadership, a powerful and defensible software moat, and incredibly strong financial performance, you have all the ingredients for a truly generational company, one that is poised for sustained success for decades to come. Nvidia isn't just passively following existing trends, it's actively creating them, shaping the future of technology with its groundbreaking innovations. Therefore, for any serious long-term investor looking to capitalize on the transformative power of AI, NVDA is an absolute must-have in their portfolio. This investment is about more than just chasing short-term gains, it's about owning a piece of the very future of technology, participating in the AI revolution. The Nvidia story is simply that strong, that compelling, and that full of potential. Nvidia is currently firing on all cylinders, executing flawlessly across all areas of its business, and will likely remain a phenomenal investment for many years to come. Their relentless innovation, unmatched scale, and powerful ecosystem combine to make their leadership position nearly unassailable, creating a significant barrier to entry for competitors. So, if you're looking for direct exposure to the immense potential of the AI revolution, Nvidia is undoubtedly the name to own, the company that will lead the charge. Don't just passively watch the future unfold, actively invest in it by investing in Nvidia. Next on our list is Alphabet, trading under the ticker GOOG. This is the parent company, the powerhouse, the very foundation behind Google, the search engine we all know and use daily. But it's so much more than just a search engine. It also encompasses YouTube, the world's largest video platform, a place where billions of hours of content are consumed every single day. And of course, Android, the mobile operating system that powers a vast majority of the world's smartphones. If Nvidia is building the cutting-edge engines that power the AI revolution, Alphabet is strategically using those engines to shape and define the digital world we live in, influencing how we access information, communicate, and entertain ourselves. At its core, Google search remains the dominant force, a near monopoly in the search market, boasting billions of daily users who rely on it for everything from quick questions to in-depth research. It's an integral part of the internet experience for countless people around the globe. This massive user base translates into unmatched intent-based advertising capabilities, allowing Alphabet to connect businesses with consumers at the precise moment they're actively seeking information or products. This dominance in search and advertising fuels a seemingly endless river of cash, providing the financial resources to invest in future growth and innovation. This cash flow is the engine powering Alphabet's continued growth and its relentless pursuit of innovation across a wide range of fields. Beyond search, YouTube has become the world's second-largest search engine, a testament to the power of video content and its growing importance in how people consume information. And it's not just a platform for entertainment. YouTube is also an advertising juggernaut, attracting brands and marketers eager to reach its massive and engaged audience. With billions of users worldwide, YouTube continues to grow, and its monetization strategies are becoming increasingly sophisticated, unlocking even greater revenue potential. Then there's Android, the ubiquitous mobile operating system that runs on the vast majority of smartphones globally, giving Alphabet an unparalleled reach into the hands of consumers. This dominant position provides Alphabet with a strategic advantage in the mobile ecosystem, controlling a key gateway through which users access apps, services, and content. Android also serves as a massive distribution channel for Alphabet's own suite of services, seamlessly integrating them into the mobile experience and driving further engagement. This interconnected ecosystem creates a powerful flywheel effect. Each product and service strengthens the others, creating a synergistic effect that deepens Alphabet's competitive moat and makes it increasingly difficult for rivals to compete. Google Cloud is another fast-growing segment within Alphabet, rapidly gaining market share in the lucrative cloud computing industry. Google Cloud is leveraging Alphabet's unparalleled expertise in AI and data analytics to offer cutting-edge solutions to businesses of all sizes. This positions them to directly compete with industry leaders like Amazon's AWS and Microsoft's Azure in the battle for cloud dominance. As more and more companies seek to integrate AI into their operations, Google Cloud's advanced AI tools and capabilities become a major selling point, attracting businesses looking to leverage the power of artificial intelligence. This makes Google Cloud a key growth driver for Alphabet, with significant potential for future expansion. Speaking of AI, Alphabet's leadership in the field is virtually unmatched thanks to its deep investments in research and development. The groundbreaking work being done at DeepMind and within Google Brain has consistently driven major breakthroughs in artificial intelligence, and the introduction of the new Gemini models promises to keep them at the very cutting edge of AI innovation for years to come. This AI prowess isn't confined to research labs. It powers virtually every product and service within the Alphabet ecosystem. From smarter and more intuitive search results to enhanced features on YouTube that personalize the viewing experience, and to the advanced AI services offered through Google Cloud, AI is deeply embedded in everything Alphabet does. While some industry observers fear that generative AI could potentially threaten the dominance of traditional search, Alphabet is proactively integrating AI directly into the search experience, enhancing its capabilities and ensuring its continued relevance. This demonstrates Alphabet's ability to adapt and evolve, ensuring that it remains at the forefront of technological innovation rather than being disrupted by it. Despite its immense size and influence, Alphabet often trades at a surprisingly reasonable valuation, making it an attractive investment opportunity. This is especially true when considering its impressive growth prospects and its incredibly cash-rich balance sheet, which provides a significant buffer against economic uncertainty. The company's commitment to returning value to shareholders through consistent share buybacks and the recent initiation of a new dividend program demonstrates a mature and shareholder-friendly approach to capital allocation, further enhancing its appeal to investors. Beyond its core businesses, Alphabet also has a segment known as Other Bets, which includes ventures like Waymo, its self-driving car division. These other bets represent potential free upside, offering exposure to future breakthroughs and disruptive technologies that could significantly enhance Alphabet's long-term value. Of course, regulation remains a potential risk, particularly given Alphabet's size and influence in the digital landscape. However, Alphabet's global reach and the essential nature of its services provide a significant degree of resilience, mitigating the potential impact of regulatory challenges. The company's management team, led by CEO Sundar Pichai, is highly regarded for its strategic vision and operational expertise. The current leadership is particularly focused on driving efficiency and profitability, which is expected to lead to further margin expansion and improved financial performance. In conclusion, Alphabet represents a unique and compelling blend of stability, consistent growth, and groundbreaking innovation, making it an ideal core holding for virtually any well-diversified investment portfolio. When you invest in Alphabet, you're gaining exposure to dominant search capabilities, the world's leading video platform in YouTube, a rapidly expanding cloud business with Google Cloud, unparalleled AI leadership, and significant moonshot potential through its Other Bets segment. Alphabet's services have become indispensable to billions of people around the world, giving the company a rare level of durability and long-term stability. The market often underestimates the true strength of Alphabet's competitive advantages, failing to fully appreciate the depth of its moat. Their cutting-edge technology, the vast amounts of data they possess, the power of the Google brand, and the interconnected nature of their ecosystem make them a truly formidable force that will likely remain dominant for many years to come. So, while Nvidia represents a hyper-growth play on the hardware side of the AI revolution, Alphabet offers a more stable and diversified bet on the overall digital economy, with exposure to a wide range of high-growth sectors. Owning both Nvidia and Alphabet in your portfolio gives you comprehensive exposure to the most powerful and transformative technology trends of our time. Alphabet is not just a participant in the digital world, it is absolutely essential to its very functioning, making it a compelling long-term winner in the investment landscape. Don't miss out on the opportunity to invest in this digital giant, a company that is shaping the future of technology in the world around us. There you have it. Nvidia and Alphabet, two world-changing companies poised for long-term growth. Nvidia leads the AI hardware revolution. Alphabet dominates digital information and advertising. Both offer compelling paths to building wealth through foundational technologies. If you're ready to level up your investing, check out my Value Stocks Investing Master Course. It's designed to teach you the principles used by legends like Warren Buffett and Benjamin Graham. Don't just watch the future, invest in it. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Trust me, your future self will thank you. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the StocksGalore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/StocksGalore and become part of our growing community of smart investors. Link is in the description. Don't forget to like, share your thoughts in the comments, and subscribe to the YouTube channel so you don't miss out on the next important financial investing update. Thanks for watching, and I'll see you in the next one.